Hi, Unconventional Wisdom, the CSE Investment Show. We're here every day on Thursdays from 10 a.m. Central, and recorded on YouTube. You can watch it live. You can go immediately, probably within 3 or 4 minutes after this broadcast ends, and you can see the broadcast on YouTube, plus all our previous broadcasts. If you have a chance, our website, compoundstockearnings.com, sign up for our Cow Report. It's free. It's been published a little over 20 years now. It has all the activities of all our programs, what they cost, what you get some free time on some of them, who does them, schedules, and you can sign right off of the website. You get to see all our correspondence with all our clients around the world. They write in emails, and people answer those emails and discuss them, and you can see what people are making, what kind of problems they run into, or no problems, if they never run into any problems. So it's our Cow Report, and it doesn't cost anything. You can sign up on compoundstockearnings.com. If you want to send an email to this podcast that we can read, it's podcast@compoundstockearnings.com. If you want to call in, we have a phone number, 214-377-1108, 214-377-1108. Down here in Puerto Rico, Almost Del Mar. And Randy is not going to be here today. He is en route. He's in an airplane flying to Atlanta, where he has a home. Keith is on vacation. You never know about Keith. Sometimes when he's driving to his vacation, wherever he's going, he'll come on and John is here from Chicago, from Windy City. And so we're going to talk about what John did today, because it's really it's really making a big, huge turnaround in our macro trading. So I'm going to turn over to John here in a few minutes. Before we're done, we had another client that subscribes to that service that really got John hooked on using the stock. Objective of the macro trading is to make 1% net, 1% a week. A week. If you put 1,000 account one time, never put any more money in, make 1% per week. In 15 years, you get like $2.5 million, and then it really counts quickly after that. So this is this week, I guess, is the first time we've used stop loss movement, which forever just adapted to the micro moment trading. We'll have John describe that, but this is a short week. Number one, we hadn't had Friday yet. Tuesday, the market was closed, but so far we're ahead 10.97%, and that's due to a stop loss we had where we lost 1.96%. A lot of times the things move so fast, those losses would be 7, 8, 10, 15%, 17%, which is pretty much activity for the week. This is our first real proven week of using the stop. We're up 10.97%, and we're only trying to net out 1%, and we haven't even had tomorrow yet. So, John, why don't you kind of pick up how we kind of backed into this? And of course, like I say, stop loss has been around forever. We just never applied them to our micro trading. Make a huge difference. Go ahead, John. Kind of tell people how you got into it, how difficult it is.
As you said, I was aware of this, and I just didn't know how to apply it really online. But I had a guy at tech support on my platform go through this stuff with me, but then I forgot the logistics of it, and it was just as simple as a right click on the ask numbers on either the call side or the put side, and it brings up a 3-line transaction, if you will, the buy to open line, which you have to select that price. It doesn't move up and down automatically like a normal, just a single trade might do, but it also gives you a window for the sell to close number, which you have to establish. And in this case, mine somehow defaults to $1 above what you're buying at, so you have to go back in manually, and or you can sit there and hold the downward button and slew through 80 or 90 cents of that to get down to a 10-cent profit, if you will. And then the third line is the stop loss or sell to close if the market turns around on you in just a few seconds, which is what's been kind of my nemesis, is getting into something and then just seconds later it turns the other way, and the next thing you know, you're down 10 or 15 or 20%. And you haven't even had a chance to breathe or get a drink out of a glass of water here. So it's nice to be able to set up, 3, 4, 5, 6 cents. And sometimes that was too tight. We did that, I think, on Wednesday, Monday or Wednesday, I don't know, whatever. I tried it first, and we were almost in and out in seconds. And then I also had a momentum trade from a couple days ago that clicked in yesterday, I think it was. At the same time, it just happened to close as the market was going up. So I had dings going off everywhere, and it took a few minutes to work out the decoding of the messages and find out what was bought, what was sold, and where we were. But anyway, it's going to be a great deal if we can minimize those losses to just a few percent. And then we showed this morning in just 4 minutes, we wound up with an 8.53% positive return. And with the other two returns that we had this week, there was, like I said, a loss of just under 2% on, I believe that was yesterday in 12 seconds, so that stopped us out pretty quick. And then on Monday, we had a 4.4% return in 5 minutes, 40 seconds. So in just under 10 minutes, like you said, we got a 10.97% return for the week going right now. And that's just 3 days that we've actually traded this week.
Yeah. Tuesday was off, and tomorrow hadn't. Yeah, so it's going to make a huge difference. We're going to start. We've expanded on our macro moment trading. People that subscribe were grandfathered in, and it started off being 8:30 to 9. And typically, a long time ago, you could really get 1 or 2 trades in that fast on macro moment. Because a lot of times ones on the last few minutes, sometimes a few seconds, and because John has so many other positions that he can now do with macro moment. We've expanded hours, so it's 8:30 to 9:30, and he picks up other trades other than the pure macro moment trades. He'll get some momentum trades and such, and they're good. And he, he reports. You see in the Cow report every week these returns, and a lot of times. Last week I think was 97-something%, John, something like that.
Something. It was much better, back on track again after a poor January on my part, which is too bad. But we're working on it.
I think the key to these stop loss is the fact that until you do it, once you start doing them, they come second like making. So they appear to be kind of clumsy the first few you do, and John's improved over the first one he did a few days ago. It sounded like he was having a wrestling match with it.
Exactly.
But today was much better, so we anticipate it's totally going to change the character of the macro trade. Because again, we only anticipate making 1% net. And people say, yeah, well, you got commissions. No, because you don't have to pay commissions anymore. Everything from the Wall Street firms, Merrill Lynch, Bank of America, any number of the firms don't even charge commissions anymore, and that's not even counting the online ones. So commissions are a moot point. So it's going to be a short seminar because we're managing some people, but it's really, really important stuff. They pour it up teaching in the macro moment. This is the 9.7 cents, and we've only had really 3 trading days. We had one more left. We may go over 10-11%. Because the problem would be those things move so fast, like John was saying. You'd have a good profit, then you trade when they move so fast, you'd lose 15, 16, 17% before you had a possibility of getting out of it. And now that's pretty much history. It's going to happen. So I think John went today, because I remember I had to almost screen it when you had that huge profit.
Take the profit. Take the profit.
Well, is there on the front end? Can you tell when you're really putting in one? I mean, when you only really want to make 8 to 9%, that was going to be like 16 or 17% profit.
Yeah, on my platform, I got to go way down to the bottom, and I had the laptop in front of the screen that I'm doing the trading on, so it's just a logistics problem on my part. I'll figure this out. We'll reinvent the wheel or something, but trying to talk and move the screen out of the way so I can see what's going on, and then the option chain is above the screen, and all these dog ate my homework excuses, but we'll get it turned out.
I wish we had a video trading, because it'd be sort of like a Laurel and Hardy movie. It's based on what it sounds like. All this stuff moving around. And
it'd be a real hit. We could call it Trading for Dummies and just watch me flail around and try to juggle stuff and try to get a handle of a cat or something or two.
There you go. People that think trading is so serious, it would show that the real life trading, you're just knocking things off the desk and all kinds of terrible things are happening, but you still end up with 10.97% for the week.
Well, I'm gonna have to revamp my office. So I got room to put these screens up side by side, so maybe that'll make things a little bit easier here. And
Yeah.
and
You know, maybe too, what compounding. I was reading an article the other day. It sounded like I wrote it. It was talking about, day traders don't make any money. 80% of them lose. Most of them don't make any money, but they do make money. And that's because they're trying to guess things. They're trying to speculate things. They're trying to use their intellectual financial genius, as it might be, to make tons of money. And they end up quitting if they don't ever make anything. It said the only way you're going to make money in the market is to do something that has quick, small returns and consistent. And that compound do all the work for you. And that's exactly precise what the micro moment. It sounds like I could have written that. I'm always talking about compound. But this, when you think $1,000 an account, never adding another penny, and I talk about all the time. These people just going out and getting jobs. Maybe they're 25 years old, got out of college. 25 years old, they don't have tens of thousands of dollars to start investing, and they don't know anything about investing in the first place. They can do $1,000, one time, never add to it again, 1%. And in this case, John could technically quit for 10 weeks because it's 10.97. So he can quit for 10 weeks. But
I can't quit. I have to trade.
There you go. And anyhow, in 15 years, you get $2.5 million at 1% a week. In 20 years, you get $17 million, something like that. So anyhow, that's what I wanted to get over today. If you do not subscribe to the service, if you go to our website or call Sue Ann at our office and sign you up. But John, real proud. This is really good because again, it went so much smoother today than last time because it was so awkward doing that for the first time.
Well, I knew we'd have some growing pains. I just was trying not to show them all on camera or on the webinar at all the times. But even the Wright brothers only flew 112 feet on the first flight, so you got to give us a little time, and we'll get the thing going here.
There you go. Did you see the article about the Delta flight that had to make those dives? A lot of people got hurt.
No, I saw they were into some turbulence, and I saw a cart all tipped upside down. That can be dangerous stuff. So, boy, if you're flying, keep that seatbelt fastened.
Direct nose down dives.
Yeah.
The fighter jet. So,
I don't know what they were doing. I got to look that up and see. It's fascinating to see what effects can happen up there, but dangerous stuff. I also read, I think it was early this morning in the email, the Airbus is going to stop building the A380. So it's kind of like the trading too. You don't want to build an airplane that holds 800 or 900 people and fly half full because not everybody wants to go the same place that airplane's going for 8 or 9 or 10 hours or more. That's the thing, do a lot of quick little trades and take little people all over the place in smaller airplanes. So it's the same thing, if you will, in the comparison with travel and anything else. Spread it out. And,
well, the other thing we have going between me and Marcus, and it has to do with self-driving cars.
Oh, yeah.
I don't think that they'll ever work. They'll ever see the light of day, and because there's too many things that can go wrong. Now, understand with this new 5G, 5K, whatever service coming out on the internet, will substantially improve the ability of those self-driving cars to really pick up things that they hadn't been able to pick up.
Sure.
And so it substantially lessen the risk factor. But we'll see who's right. Marcus or John. My big bet's going to be Marcus. We're going to find him somewhere they have down in Dallas where he is. Find one of those cars. Okay, Marcus, get up there and just hop in it.
I would hop in it. Absolutely, I would. I'd be safer. Feel safer than some idiot human driving it.
Well, in all honesty, Marcus, I read that article about the 5G. I guess they say it's going to substantially improve the ability of cars to get more information and not be clumsy. It's clumsy.
Right. Yeah, they're saying 5G is supposed to be another revolutionary increase for a lot of things.
Yeah, absolutely.
Just make sure you have Wi-Fi in the car, and then while you're not driving, you can trade while you're going to wherever you got to go.
There you go.
That's right.
Do a micro moment trade and pay for that doctor visit.
Train the car to do the trading for you.
That's it.
Okay, well, everybody go to our website, compoundstockearnings.com. Sign up for the free Cal report. Get a copy. That thing comes out every Friday. It'll come out tomorrow afternoon. Stay on Saturday. It'll come out Friday. And it's got all kinds of stuff in it. And all about CSE and all about our people that teach our courses and do these trades with their real money, by the way. These are real money trading trades. And excited because I'm excited to talk to Keith because he's added this stop loss lane to one of his credit spread techniques, and evidently it's doing real well. And we've got this macro moment. So we'll let everybody go. Appreciate you being here. If you want to see this again, wait about 5 minutes, go to the YouTube channel. You can watch it all you want. And all our other ones that we've already done year to date or to date. And also, those go back. Thank you. Thank you, John.
Hey, thank you.
I mean, Don, I mean, John. And we'll see you tomorrow.
Okay, we'll see you tomorrow. Thanks a lot. Take care. Bye.
Bye.